All right. Okay, so good afternoon once again. All right, so I took my rule. I think anybody new popped in since then. Right, so I have seven. Yeah, seven of y'all online. And then six, that's 13. Yeah, that's 13 people in person, right? Okay, cool. So, folks, today we're gonna kind of wrap up balance sheets because we're taking a little long, and well, mock exams are pretty close for some of y'all, and as we know, well, we already talked about the situation with the actual exam, right? So it's on the 7th. So we are in less than. Sorry, why is my mouse upside down? My cursor. Oh, there you go. Okay, it's back now. Yeah. So the actual exam, right? So we know the 5th. Oh, the 5th of May is the English A exam. The 6th is the PoA, and the 9th is maths. Okay, cool. That crash course looking like it might start in the 28th, boy. Let's do 2 or 3 sessions a day. All right, Matthias. Hey, Matthias, good afternoon. How are you going? Good to have you on. Okay, cool. Yeah, cool. Yeah, cool. Just trying to get stuff started, right? So we did some of the questions so far. We did our Robin. We did best big. We didn't do best big, didn't we? It says liquidity. No. Okay, so I feel like I opened the wrong file here. Give me 1 sec. Ah, that's the actual file. Oh, here's Cassie. Okay, here we go. All right. Hey, good afternoon, Cassie. How you doing? No worries. We're not gonna start to. So okay. All right. So folks. All right. So this is what we did so far. We did Jan 2020. We did the non-current asset section. Looks like we did the majority of the 2015 question as well. But that was also done. Looking through the May papers, and some of them are very word intensive. I want to pull up. We do want to practice. Hold on, let me listen. Ayaz. Hey, Ayaz. Good afternoon. How you doing? Mario, boy, I have a cousin Mario. Hey, Jewel. How you going? Right. Okay, so folks, what I'll do, so I hold on, been on here. I guess we should be okay with that. No, total liabilities. Yeah. Why? I don't know. All right. Not that one. Right. This is the me, right? John R. Robin. Okay, cool. So maybe we can start with R. Robin. R. Robin is a kind of easyish one. All right. So what we're gonna do? Let me print out this for everybody in class. So 1, 2, 3, 4, 5, 6 copies. All right, cool. Print a couple extra in case anybody else pops in while we're working it. I feel like I want to pull the answer sheets from across here. Yep. Hearing the dogs barking, so might be somebody else. All right, but we'll take a look just now. All right, so in the meantime, while that's printing, let's just take a little browse through the question, right? So just so you know, this is the Jan 2013 question, so a little more than 10 years old. So R. Robin commenced operation of a small restaurant on the 1st of June 2011, right? With an operating capital of 307,800, sorry. So they're calling it operating capital, which again, as far as I know, doesn't mean anything different than regular capital, right? He did not set up a proper accounting system, so that's the problem there. However, he provided the following information certified by his accountant, right? Let me just zoom out a little bit. Oh, okay, cool. All right. I guess I could look forward to your input then. All right. Cool. Sounds good. It is less than a month away. For some of the aspects of it, yes, like the orals and the yes. But for the big exams, yeah, we have a little more than a month. A little nearer to 2, but less than 2 for sure. All right. So again, let's just take a brief. So we have building, furniture and fixtures. Sorry. Right. Vehicles, machinery, and equipment. Now, all those are what? Assets or what? They're assets. And more specifically, are they current or non-current? They're non-current, right? So all these assets are usually expected to last for more than 1 year. All right. What topic is this? Balance sheets. Right. And we have receivables or debtors, payables or creditors, inventory, 6-month loan, mortgage, and cash and bank. All right. So in the items after machinery and equipment, right? So receivables is a what? Asset or liability? All right, cool. What about inventory? All right. And cash and bank are assets as well. They're all current assets, right? And then that leaves the payables, 6-month loan, and mortgage. And those are all what? Liabilities. Now, the payables and the 6-month loan are which one? Current or non-current? Current. And mortgage is definitely non-current. All right. So we've identified the items that you can use to do the assets and liabilities section. All right. We have an item down here in part C, but we'll come back to part C just now. Let me zoom out a little bit more so I can send a picture of this in the chat. All right. So what I want you guys to do is to draw up the balance sheet. I king. Okay. I queen. I don't know. Yeah. Let me just send a picture in the chat and we'll discuss a little bit more. Well, here's Aliana. Oh, somebody's asking about accounting ratios and inventory. I have that already on my YouTube channel. All right, so check it out there. Huh? Hey, Aliana, good afternoon. How you doing? Good to see you. Huh? We just kind of talk through a little bit of the questions here. All right. So loans are current or non. All right. So it depends on what type of loan, right? When it says 6 months, we expect to pay that back within 1 year or less, right? Well, sorry, it says 6 months, which is definitely less than a year. Any liability that has to be repaid within less than a year, well, 1 year or less, sorry, is definitely current, right? The other item, the payables, that's definitely current as well. Mortgage, that one is, unless otherwise stated, we could safely assume that it is a non-current liability. All right, I'm going to zoom back in a little bit more. All right, now it says order of permanence, draw up the balance sheet for R. Robin at the close of business on the 31st of May 2012. The closing capital must be included. All right. So there is a bit of information with respect to opening capital top. Don't worry about that for now. All I want you to do is to do the net asset. Now, you can do the net asset version of the balance sheet. Now, they did not say to include net working capital. So you don't have to. You can if you want. Okay, yeah, guys. So that's what we do, right? So we know building, furniture and fixtures, vehicles and machinery equipment. All 4 of those are non-current. So you're going to start off with non-current assets, especially because it said order of permanence. Permanence means long-lasting. Now start. And so we heading up R. Robin, right? Statement of financial position as at 31 May 2012, right? And start with the non-current assets. So I'll give you 5 minutes and I'll put it up on the screen, right? But like I said, so what we are doing is the net assets presentation. So it'll be assets minus liabilities. Now, again, the question didn't say whether or not to show working capital. So it's up to you whether you should or not. So you could do a working capital presentation, or you could do total assets, total liabilities, and then subtract the net assets. Unless the question specifically says to show working capital, you do not have to. Right, and of course, if anybody has any questions, please feel free to send them my way. WhatsApp it, type it in the chat, say it out loud. We are comfortable. Is this topic on your YouTube? Yes, there's a playlist. Victoria. Oh, sorry, Victoria. All right. You could shift that to one side. Okay, cool. R Robin, right? Yeah, R Robin. So that's going to do the first section, which is the non-current assets. R Robin. A little too tight. Cool. Right. So R Robin. That 31. 12. Cool. Right. So we actually could kind of like not put the column headers. So glad I actually find this a bit easy. That's glad to hear that. Yeah, most people don't. So consider yourself fortunate. All right. So oh, we have more than that. Okay. So let's actually delete everything here. We'll put everything back fresh. All right. Cool. So non-current assets. So if they don't give you like cost and depreciation, that kind of stuff, just assume that what you have there is the final value, right? So you could do building, right? So you could go. Oops, why am I putting in there? Furniture and fittings, vehicles, 500, and then machinery and equipment. Right. And then now. Right, so you're gonna add up those and put them here. Right now, again, if you prefer to do a networking capital presentation, that's perfectly fine. It doesn't actually matter where the things go once that you have them there in the correct sections. All right, okay. So that's where we are so far. So I'll give you the next 2 to 3 minutes to sort out the current assets. And we have 4, right? So your inventory, your receivables, your cash at bank, cash in hand. Yeah. Right, fixtures. Yeah, no problem. Most welcome. All right, guys, let's take a crack at the current assets. So current assets. So, Teresa, tell me what items go in this section from this question here. Right. So we're going to put inventory. Because remember they asked for order permanent, right? So inventory is the most permanent or least liquid current asset because it's never bound to be sold, right? What's the value in the inventory there? 14,200, right? After inventory, we have receivables, right? So receivables. Whether you put receivables or debtors or in brackets, whatever, right? What's the value there? 11.6. Right. All right. And then we have cash at bank, which is how much? Okay, so this bank. And then regular cash is how much? Right. No, cash is that's 3,002. Yeah. All right. I'm gonna add all those up and pull it through. Okay. So what I'm gonna do initially, guys, is I'm gonna do a net asset presentation. So total assets minus total liabilities. I will then copy and paste the whole file and do the net working capital for anybody who may have done it that way. But regardless of which way you do it, you will actually get the final answer, the same final answer. All right. Okay, so I'm gonna put it on. Okay, so what I'm gonna do, I'm gonna add these two things together. I'm gonna call that as, of course, total assets. Well, an extra highlight. Okay, so what I want you guys to do next is do the non-current assets. We only have one, sorry, non-current liabilities. We have mortgage, right? And after the mortgage, you have current liabilities. So you have payables and the 6-month loan, right? So put them in the correct sections, get a subtotal for each section, then get a grand total for liabilities, which you're going to then subtract from the 395 one. Right? And of course, if you have any questions about anything that's currently on the screen, let me know. If you have any other questions, of course, let me know as well. All right. Google Meet, just give me a quick G in the chat if you guys good with what we have so far, please and thanks. All right. If you have any questions, please feel free to let me know. Thank you. Right. 6 responses, both about 11. The next 4 or 5 are you all let me know what's going on now, please and thanks. There you go. Right. For the next one. Oh, Mark Tully is present, right? Let's see Yuri. Age, excuse me if Nyla come in. Not. Okay. And Jaden is here. So I don't put him. I guess by now Shimona here not gonna be here. So Logan. What if it changes? I'll just put him in, that's all. All right. Let's put in the non-current liabilities and the current liabilities. So non-current liability. So these are liabilities that will be paid. What happened there? I'm not sure. That'll be repaid over longer than 1 year. So that's the mortgage. Right. So that was how much? 140,000. Sorry, missing a zero. Wow. Right. All right. Now you could actually just put the 140 here and not put like this and a subtotal. I just prefer to have consistency in my presentation in terms of, hey, details here and subtotal across in the middle. Right? I just find it kind of flows a little better. But again, there's no one right way to present the information. We'll let teachers tell you that there is. There is not. Okay, and we have just two current liabilities, right? We have the payables and we have the 6-month loan. Right, so it's a loan, but it's due within less than 1 year. Therefore, it's definitely good. Sorry, no, that's the wrong thing. Oh, no. Sorry, my bad. Right. Add those two together. Put that across here. Right. When we add the current and non-current liabilities together, we get total liabilities. Okay, so this is liability. Right, and we subtract assets minus liabilities is equal to, well, capital, or in this case, net assets.
Yeah, I think it was just when I used my data, it didn't open.
Oh, it went better. Yeah, it may have been. Yeah. This supposed to be yes. Right. So let's put that double line. Cool. Put on gold. Let's put on a different color, shall we? Yeah, maybe a darker gray. Yes, because non-current is more right. So if you're doing the working capital presentation, which I'll show after, you'll put current liabilities before non-current because you have to get the working capital. You have to subtract current liabilities from current assets, right? But there's no one right way to present the balance sheet, right? So from here now, all we have to say is financed by. Sorry, hold on. Capital. Right, and there you go. So net assets equal to, right, the total balancing capital. Okay, my head blocking. Okay, scroll up. Right. So like I was saying, this is what we call the net asset presentation of the balance sheet. Right. Some people like to do a working capital presentation. So I'll show that now. Right. This requires a couple of little shifts. Right. Now your syllabus is specific about you having to know how to do it, but it is not the only format that is acceptable for a balance sheet. Right. To me, the working capital format is actually the least intuitive format. Give me one sec. Right. So we need to actually shift this. Right. So here, we'll subtract the current liabilities from the current assets and get net working capital. Right. That's going to be, well, since it's positive, you're going to add it to the the non-current asset value. Right. So that there's your total assets minus your current liabilities. And now you're going to subtract the mortgage. That. And the same 243.9, right? Right. So if you prefer the working capital format, you could do that one too. The question didn't say specific that you had to do it, or you didn't have to do it. All right. Okay. In class, people, are we okay with the balance sheet as it currently stands? How many people did the working capital version? This one here. How many people did the normal net asset version? Everybody else? All right. Yeah. Right. So we're gonna look at that now. All right. But let's double check. So Google Meet, just give me a quick G in the chat if you guys are good with the final balance sheet. Right, whichever way you did it, right? So the 243.9 is the figure we kind of after here. Right? If of course anybody has any questions, need me to re-explain anything, that's not a problem. But you have to let me know. Okay. 9. Okay, I got 9 this time out of the 11. Not bad. Okay, right. So, as Jaden was asking, what about the rest of the question? What are they asking? Now, a couple of things. One, they gave us something up here in the opening paragraph, which said R. Robin commenced operation of a small restaurant, right, with a capital of 3078. And R. Robin advises that during the year, first year of operation, he withdrew 65,000 from the business. Now, it says using information on closing capital, which we would have calculated in this question here, in part, well, this previous part here. Calculate the profit for the year, show you're working clearly, and it's 5 marks. Okay, so if you know how to do your capital section for your balance sheet, right? So so right now what we've done is we already have the closing capital, right? But remember the capital section of the balance sheet, right? Now check it. The owner starts the business with what purpose? To make a profit. And what do we call any resource the owner invests in the business? Capital, which we use to buy or finance assets, right? Now, when the owner makes a profit, what does that do to the owner's investment or the amount of money the owner has? Increase or decrease? Increase, that's correct. So if we earn a net profit in the balance sheet, what we would show is we'd show that being added to the opening capital, right? So your opening capital, so we could put balance at start, right? Right, so we have a value there. And then it would either be add net profit or minus less net loss. Right. That will go, okay, sorry, let me actually, right. So after that, you get a little subtotal here. And then finally, we have to minus the drawings. Now we're here. And the balance, and then balance at end. Right. With this figure here, sorry. Okay. Now, we know already the balance at end because this value on top here is current, total assets. Sorry, one sec. Total assets minus total liabilities. And according to the accounting equation, assets minus liabilities equal to what? So we know that this figure here is 243,900. It has to match it out. So I just want to shift it across. Right. Now, we also know the opening balance, right? Because it says R. Robin commenced operation of a small restaurant with an operating capital of 3078, right? Before we go any further, I wanted to notice something here, right? Opening capital is 307,800. What is the value of closing capital? 243. Is 243 more or less than 307? Less. Now, if the owner made a profit, it's added to capital, which cause capital go up. But the owner capital went down. Now, we also have in item C here, R. Robin advises that during the first year of operation, he withdrew 65,000 from the business. Any resource the owner takes out for his or her own purposes is called drawings, and drawings is therefore subtracted. Right? So that's how much? 65,000. So this figure here, right? How do we find that? Right? Because normally it's 3078 plus this minus the 65 equal to 243.9. Right? So how would we calculate net profit or net loss? Literally go backwards from the bottom up, right? So if you're going backwards, you do the opposite operation. So you'll take your 243, you'll add back your 65, and then you'll subtract this item here. All right, so let's take a look. So equal to this minus this. So 1,100. So the net profit was not big at all. All right. All right. Any Cape revision nights? Me, myself, and actually every Saturday morning, 10 to 12, we're doing, Cape topics. The lives are still up on my YouTube. They won't stay public for ever, so you might want to get on that. Right, so once again, we started off with the balance at start. We calculated the balance at end on top of here, 243.9. Right? Now, if you started with 3078 and you ended with 243.9, that implies that, hey, you made a loss. Or maybe you a small profit, because the drawings are low in 65,000, and that could actually cause the balance. Sorry, I'm not gonna tell myself here. Unit 1, actually no, Unit 2, sorry. I have a Unit 1 class that I don't teach. And actually I have my videos uploaded on my school.com community, so you can check that out if you want. Yeah, sorry. Right, so your opening capital is 3078, your closing capital is 2439. Now, again, it implies that there might be a loss, or it might also mean that the drawings were a lot bigger than the net profit. Because net profit is added to capital because it increases capital. Right? Okay. I'll leave that there for a couple of minutes. You can take it down. Right? What I will do is just check on the rest of the next question. Sorry, yeah, guys, I had to take a walk. Knocking out here. Right, like I was saying, you have an opening balance of 3078. We know that from this line here, the drawings 65,000, so that's going to be subtracted. Right, so check this, right? If you think about it, if you have 307,800, right, and you minus your drawings of 65,000, you get 372. Nope, sorry. Right, 242. Now, this 243.9 is just 1,100 more, which means that we had a profit. All right. So, sorry, what we're going to do now is we're going to tackle the next question. But before I go on to the next question, do you have any questions on this item on the screen? Any questions? Anything? No? Right. Google Meet, if you guys are good with that, just kindly give me a Genie chat, please. Boy, 10 out of 12, boy. Oh, 10 out of 11, that's pretty good. All right. Okay, so what I want to do now is I want to give you guys another question to try. Take more walk and wake up. Okay, one second, give me trouble. Okay, there you go. All right, this is Jan 2017. I'm going to zoom in a little bit more. Okay, so we have inventories, accounts payable, billings at book value, loan payable, accounts receivable. So the first, right? Okay, motor vehicles at book value. Okay, written down already. So we don't have depreciation, we just have the book value. Bank, prepaid expenses. Sorry, I literally drifted off. Right, where was I? Bank, prepaid expenses, machinery, book value, cash at hand. We don't know capital. How do we find capital? What minus what? Assets minus liabilities. Good. Right, wages owing and bank loan 2025. Hey, as this year. Now, this is the Jan 2018 question, sorry. Now, they want this in order of liquidity, but we're going to stick with permanence for now. All right, so let's start. So what I'm going to do, let's just browse through a couple of these things here and see which ones are which items, as in which classifications, and then we will start the balance sheet. Now, again, you're free to do whichever format you prefer, but hold on, let me print this off for those in class, sorry. 1 second. 2, 4, 5, and 3 is 8. Right, okay. So let's just talk through some stuff here, okay, right? So inventories, asset or liability, current or non-current, current asset, good. Accounts payable, asset or liability, current or non-current, current, right? Billings at book value, that's an asset, yes, but current or non-current, non-current. All right, loan payable in 20. Now we are at 31st of December 2018. Any date in 2018 is 1 year or less from today. So if it's repayable in 2018, would that be classified as current or non-current? Current, because you're paying it back within a year or less, right? So accounts receivable, current asset. Motor vehicles at book value, non-current asset, right? Bank, current asset. Prepaid expenses, current asset. Machinery at book value, well, that's a non-current, right? Cash at hand, yeah. Sorry, yes, current. Well, capital is capital. Wages owing, liability, and bank loan 2025. Yeah, liability, and yes, well, you used to call it long term, it's non-current. All right, cool. So we know what each item is. So when this is finished printing, hold on, why is it doing that? Oh no. Um, I'm just gonna print the question, the solution thing here. Oh, that is printed. Right, so I'll leave this up on the screen for you all. There's nothing else below that. Right, so everyone can start this now. I'm gonna take a little walk and try and wake myself up. The regular net assets, or you could do a net working capital format, which of course could include net assets. But this is up to you. I will show you how to do it. This is the only time that I've seen it because I was, yeah, lost it. Because everything has a picture like going forward, what to do? Store that in the cloud. Get like a free Dropbox or Drive or something. You don't want to happen to you. All right here. Past 5. To get in a bottle. Yeah. Fun times. Sleeping as a baby should. Up every 2 hours. The feed. He was sleeping. Depends. Because before he was sleeping straight through. So there's a thing apparently called sleep regressions, where let's go back to waking up every 2 hours to feed. Shiloh started doing better. He will cry out for a bottle, just pop it in his mouth and good. So I gotta get up and stay up and rock him and again. But she will handle Marley because she's the food source. So yeah. But like when she can't make, she's giving him to me. I rock him and I go outside with him. Like Saturday morning, I was up 4:45 outside with him. Yeah. What we gonna do? All right. I wanna start putting some. Hold on. Sorry, this is the Jan what? Jan 2018. Yeah. I'm gonna zoom out a little bit. Push it to one side. Can I zoom in more? Okay, to do that, I actually have to. That's interesting. Okay. So Jan 2018. Yeah, too small on that. Okay, no, so I'll go back to 150 on the left hand side here. Pull this a little more that way. Pull that across. Okay. A little too much. That should be visible enough. It looks okay on my side here. If it's too small for anybody, let me know. And on this side, we're gonna zoom in a little bit. Right, that's a little better. All right, so Jan 2018. Boom. Best bake boy. Best bake. Best bake. Statement of financial position 31 December 2017. All right. let's just take out everything. All right, zoom in a little bit more. Nice. Okay, what non-current assets do we have here? Buildings at book value, motor vehicles, machinery. Yeah. Okay. So buildings will go first, right? 250. Oops. Where that extra sheet come from? 250. Then we can put motor vehicles. 89. And machinery. All right. Can add all that up. Now, some people like to put a label for that. If you want to put a label, you can put total non-current assets, but it's not entirely necessary. It takes a little extra time, and I think it also, in my opinion, it kind of clutters up the visual space. And what I mean by that, it gives you more stuff to look at. It doesn't leave a lot of white space now. And sometimes white space is a little necessary to help things seem a little more presentable. But again, just my opinion. Right. Current assets. What's the first current asset we're going to start with? Inventories. Very good. That value is? Right, cool. All right, what are some other current assets I see in here? I see in receivables, I see in cash at hand, I see in bank, prepaid expenses, receivables, that's correct. All right, so receivables is next up. Permanence, stock, debtors, bank, and cash. So stop doing bullshit, Chris. Stock, debtors, bank, and cash, right? Prepayments will go in between debtors and bank. That's correct. But there is a mark given for the sequence, or at least a half mark. But you're correct. You will still get the same answer because it's the same 4 or 5 items and the same, well, put together, and when you add, it doesn't matter the sequence which you add. All right, so receivables is how much there? 22,000. All right, then we have prepaid expenses. How much is that? 4,000. Then we have cash at bank. What is bank? It's a bank, right? 17,000. And then they have cash at hand. 8,000. Right. So you could also put a label here, total current assets, if you want. But again, that's kind of more for the one column format. Right. Sorry. Okay, let's pull that up. All right, good. Glad to hear that. Right. There's also no need to write a line that I'm just doing it so it stands out a little bit more. But sometimes it kind of helps to put those kind of major figures in a different kind of presentation. Give me 1 second. Don't overhot this tea boy. Oh God. All right. Okay. Next we have non-current liabilities. Let's go there first. Liabilities. Okay, do we have any non-current liabilities? I see in our bank loan down here 2025. Yeah. Bank loan 2025. Oh. I would say to put it in so that way they know that it's why it's non-current, because the current year end is 2017, right? So 2025 means that's definitely more than 1 year from that date. So it will help to emphasize that, right? But ultimately, if you don't put it in, it's not going to be a big deal. I can't see them taking off a mark for that, right? That's 275. Wages owing, right? So wages is what you pay to your workers. And owing means that you haven't yet paid it, so you still owe it. So it's a liability. And more specifically, it's a current liability. So you could also call that wages accrued or an accrued expense. Right. Now we have, right, so current liabilities. Right, so let's scroll up a little bit so we have some more room so everything is a bit more easily visible. Okay, So what we have here, first one is accounts payable. Now, again, I've discussed this with my teacher before a few times. So as far as we know, there's no specific sequence or order in which your current liabilities must be listed, whether it's in order of permanence or liquidity. Unless they give you a high level of detail, which they don't usually, you can put the current liabilities in any particular sequence. Right. There's a loan payable 2018. The current balance sheet date is 31st of December 2017. So at any point in time in 2018, it'll be 1 year or less from now. So therefore, that's why this loan is going to be classified as a current liability. Okay, and then, right, so the wages owing. So you could put wages owing or you could put accrued expenses. You don't have to put both things. Pick one. Right, we're going to add those two things together. Nope. Right, so that's total liabilities. Liabilities. Right, and of course, now to find net assets, you're going to subtract total liabilities from total assets, and you're going to get 168. Right, that's net. Sorry. Right, and of course, that's financed by capital. So as you can see, they didn't know what the capital figure was, so you had to figure it out. Right. Some people just put this first line financed by capital, and we can see that the top half and the bottom half of the balance sheet balances. So that's perfectly fine. All right. Okay, I'm going to maximize this. Nope. Okay, that's the opposite of maximizing. I guess I'm going to have to zoom out a little bit. All right. Okay, actually, I can zoom back in. All right. Okay, I think that's everything. Just about fits. Okay, in class, people, are we okay with the balance sheet for the Jan 2018? Any questions? Anybody? Anything? All right. Google Meet, if you guys are good with that, just kindly give me a G in the chat, please, and thanks. If, of course, you have any questions, now is a good time to ask. Sorry, I'm not seeing your message. That's awesome. Since 2019, boy, wow, that's 6 years. Yeah, so Gasser, if you're still there, gaming goat. Gasser, send me you have a Twitch, TikTok, send me a link, no? I'll pop in and say hi. I'm a bit of a gamer myself. We started back. Not like super good or anything. All right, so 10 out of 11. Okay, so one person still. All right, so we have 40 minutes again, so we're going again. Right. Okay, we did Ava already, because I remember that there was the 8,000 payable out of the 68. Right, we did Ava. VIP. Okay. Current page. All right, so this is the Jan 2012, I guess. Yeah. Okay. Okay. All right, so the accountant of VIP Enterprises prepares the following trial balance as at 30th November 2011. Now, the first thing they ask for is actually the income statement. If you notice down here, they only, if you read through the whole thing, it's only these three items go in the income statement. Sales, look at this, they actually give you the whole cost of sales section. So they don't give you opening stock, purchases, closing stock, any kind of returns out card. They give you the whole figure. And you only have one expense, miscellaneous. Yeah. So here we're gonna do. I'm gonna do the income statement for y'all because it's only 4 marks. And they might be a little confused, like how can an income statement only be 4 marks? Well, there are only 3 items to go in it. Technically 4. Alright. What to do, go ahead. Oh. Alright guys, so the one you just did was Jan 2018. This is Jan 2012. That's correct. All right. So here what I'm gonna do. Let me push this to the top. I'm gonna pull this below, and I'm gonna focus specifically on doing that income statement for you right now. Now they gave you an actual trial balance with a debit column and a credit column. We have premises, capital. So they give you capital, vehicles, equipment. So we have non-current assets to the top and capital. 5-year bank loan. How are we gonna classify that? Non-current liability. Closing inventory. Now, normally we don't see closing inventory in a trial balance. Normally we see it below in the additional information section. If you see closing inventory in your trial balance, what that means is that they've already done the cost of goods sold section, right? Bank deposit fixed for the next year. So normally when we see bank, we know that's an asset. And normally bank is a current asset. But if this is fixed for 2 years, 2 years is longer than 1. And if an asset is going to last for longer than 1 year, it's classified as a non-current. Very good. Cash, current asset. Debtors, current asset. Creditors, current liability. All right. Prepaid insurance. So, and again, normally we don't see a prepaid item in the trial balance. It's only there because this is what is called an adjusted trial balance, and also an adjusted trial balance. Rent owing, right? That's a current liability. Drawings, right. So we're down here now. So let's copy and paste this item here. This is Jan 2012. Name VIP Enterprises, boy. VIP Enterprises. All right, cool. Enterprises, right. So income statement for the year ended 30th November 2011. All right, okay. So let me just delete everything. Okay, so as per usual, we will start off the income statement with sales. What's the value there? 123. Right. Less cost of sales. What's the value there? 45.7. Right. And when you minus cost of sales from sales, that gives you your gross profit. Right. Sorry, 1 second. Right. And then from that, we have to minus expenses. Now we only have miscellaneous expenses, right? And that's 52,400, right? So our net profit or net income is 25,520. Okay, now there's one last item here in the balance sheet: capital introduced during the year, 20,000. Now, if the owner puts in more capital to the business, what is going? I know the question sounds simplistic, it sounds dotish, it sounds tricky. What if you put in more capital? What happens to your capital balance? Does it increase, decrease, or nothing? It increases. So we're actually going to have to add this in the capital section. Remember, we did a capital section a couple of questions ago, and we had balance at start, add net profit or minus net loss, and then less drawings. If we have additional capital being introduced, so add capital introduced. Right. We can put that there as well. Right. Now, most questions won't have that, but if they do bring it, well, now you know what to do with it. All right. Okay, cool. So we have a net income of 25,520. Right. So what I'm gonna do is I'm gonna maximize here now. Put the info on the screen. Oh, yeah, we do have to zoom out here at least a few. Right. So here we have the full thing, and you have the net income from before 25,520. So what I want you to do for me, please, is draw up the balance sheet as at the 30th of November 2011. Will this be on your YouTube channel? Yeah, yeah, it is. It's running live there, and the replay will be public for about 2, 3 days. But this solution is already up as well. This is the Tornado. Huh. Oh, you want it? I'll send it to you now. Premises is like land and building, so it's a non-current asset. No. Hey, Steffi, bye bye. How you doing? PoA in May, June. Hey, Samasa, how you doing? Equipment is usually expected to last for more than 1 year, so normally it's non-current. No, you don't have to. If the question doesn't say so specifically, actually it did, identifying clearly the working capital. So if they asked for it, they had to show it. Mm-hmm. Right. So remember, we had a little thing across here. So you have the balance at start, right? So that would be the 200. Now the net profit of the 25,520. Remember that? Right. You add that. You know what I'm talking about, right? This piece. Yeah. So you add that, right? Now you also have capital introduced here, 20, right? And of course, if you put in more capital, it'll increase your capital. So you have to add that piece. And we also have drawings of 29. So you had to subtract that. So you have four items that you're dealing with here. Mhm. Right. So no, it is. So when you're doing the balance sheet, you have choices in your presentation, right? They ask for working capital. So on the top, the very least you could have is the first thing is non-current assets. And you have current assets minus current liabilities equal to that. And then you have to add the working capital if it's positive to your non-current. If it's negative, you'll take it away. Now, after that, you could also subtract your non-current liabilities. Or you could go below and do your capital section and add in non-current there. That's something called the long-term financing presentation, right? Which is perfectly fine. But so I'll give it a few minutes again before I start jumping in here. All right, but I will check it out. Mhm. It means that you have negative working capital. Yeah, yeah, for sure. So I want to starting here. Let's put that. This is Jan 2011. Not Jan 2012. No, it's Jan 2012. Oh, right. It's the same question. Right. So VIP enterprises. Yeah, so as you can see, a lot of the balance sheets don't give us the opportunity to practice a lot of this stuff, which is kind of stupid. 30th. Right. So let's start non-current assets. Right. What we have there? Premises. Right. 10. I'll go across 105, 520. Right. And we have vehicles. 5,000. And we have equipment 72,190. Right. And then bank deposit. Do you remember your bank deposit? That was fixed for 2 years. All right, good. Most people didn't. What did the question? That's what we talked through it first, eh? Right. Now we have the current assets. Yeah, if you didn't put in your bank deposit, it would have been 252. Yeah. And change. Yeah. I will stick with 2 going forward. Right. Okay. With current assets now, we have, so I see closing inventory, right? So inventory. Yeah. Okay. In debtors. Right. Okay. I thought you asked a question. Prepaid insurance or expenses, right? How much is that? 390. Right, cash. 300. Okay. Yeah, that's about it for current. Anybody seeing any other current assets that I not see here? Okay, so right. So now current. Yeah. Closing inventory. Look right there. 12,005. Okay. We have just a couple of current liabilities. So we have creditors. Actually, just that. I'm not seeing any other current liabilities. Rent owing. Sorry. Right. Yeah. Rent owing. 6 and 1080. Right, and you're going to subtract that 24,080 from the 32,790 and get net working capital 8710. Right, now that has to be added to the non-current asset total on top there, well, subtotal, I should say. And from this, now you could do your non-current liabilities. Liabilities, clearly. Liabilities, right? That, I think there was one. I think there was a 5-year bank loan, 25 cents, right? Subtract that from that. Right, 242, 620, and that is your net assets there. Okay. All right. Let's talk about what we have here so far. All right. Natalie Ellis. Hello, Natalie. Hello. Yeah, sorry. Yeah, Natalie, I don't check the YouTube comments very often. Sorry about that. There is how you feeling with that? All right, hold on. What you didn't have? Okay. Okay. So what for the current assets? Okay. The non-current. Okay. Yeah. Mhm. No, rent is in current. Did you mean the opposite? You put rent in non-current? Okay. Okay. Uh-huh. All right. Well, credit. This is generally current. All right. Or payables. You all okay with that? Google Meet, just give me a quick Genie chat if you go with the top half, please, and thanks. All right. If anybody in Google Meet has any questions, let me know, please, and thanks. I'll sort you out. Okay. Um, so I'll give a minute or so if anybody has any questions or if anybody's copying on anything. Right. So you see how we have accounts receivable? Right. That's what we now call debtors. And accounts payable is what we now call creditors. Yeah. Okay. So guys, I'm gonna put this one down here. Okay. So now we're gonna take a look at the capital section, right? Financed by capital. Right. So with capital, we have a balance at start of 200,000, right? Right. So balance at start 200,000. Now, to that, we have to add the net profit. Oh, that's why I did 3. Huh? Okay, now the net profit was found on top of here. 5520, right? Now we also had 2 more things. And it doesn't matter the order in which you put them. You could put the drawings first or the capital introduced. Right? So you could put add capital introduced. $20,000 less on drawings. That's 2,900. Okay, so let me see. Is that equal to that? Yep, there you go. So balance at end. This. Right, so everything fit there actually. Right. So assets minus liabilities is equal to capital. Right. So because they asked specifically for working capital, right? If you look in the question here, they said identifying clearly the business's working capital, right? So if you didn't show it, it's not like a huge deal, and the whole batch isn't wrong, right? It's just that you can't get the mark for the format they would award, but they'll still give you marks to put in the correct items in the correct place. If you do show the working capital, a mark. The one item, it can't be more than that. Not not likely. 99.9% sure it can't be more than that. As in worst case 2. I mean, I can't even see it being 2, to be honest. Yeah, I think so. Right? Because you would not have followed the instruction they gave you. So there is a penalty for that, right? But again, if they ask for a balance sheet, and now the workaround, one thing I could say is if they ask you for a balance sheet and it says, like what they say here, showing, and sorry, no, they just said identifying clearly the business with capital, right? Now, to me, if you, for example, do the balance sheet and forget, hey, I was supposed to put that in, but somewhere below, or you put a note, working capital is equal to, and you put like current assets minus, so you don't have to list out. So you can just pull like the 32,790, the 24, and you subtract it, like in a separate working. You would have still followed the instruction of showing clearly the working capital. It just wouldn't be in the body of the statement, but you would have technically followed the instruction, right? Because you get them a balance sheet and you also identify working capital, right? Now we know they mean put it in the body statement, but what they asked for a balance sheet, right? And then they said identify clearly with capital. So you could do a balance sheet and you could also do that separately. Right. Okay. Yeah. All right. That was actually a pretty good question and it has precedent for that, right? Now, so the question, in case anybody else is interested, is Teresa is asking if we didn't put the classifications of current and non-current, and we just put them in one group called assets, right? Now, if you do that and you put them in, like for example, you group together the non-current and you group the current, right? But you just have a heading saying assets, and under the heading you have all the assets, but they're still in permanence. You should be good. Yeah, because it have and in the balance sheets we have order of liquidity. Usually, that's what it is. You just have assets, and you start with cash, and you go down to the non-current ones. Right. So, okay, all right. So hold on. You can't get more marks on the award, but you could get more marks from somebody else who didn't do what they're supposed to do, right? Now, ideally, they kind of want you all to do the classifications just as a matter of course, right? As in, yeah, look, that's what you were taught, then do that, right? But again, the very spirit of it, the very accounting law says that there's no one right presentation, right? It says that there's a certain minimum amount of information you have to show, which is assets, capital, and liabilities. How you show that is up to you. The generally accepted ways you show that are either in order of permanence or in order of liquidity, and you can show it section of as current and non-current. You can, right? There is no obligation to, right? But of course, again, what are you doing? You're preparing a financial statement. You're preparing information for somebody to look at, and you also want to you also want to have the information be understandable by readers who are at least somewhat educated in reading the statements. So, for example, if you were to give somebody who is knowledgeable in accounting, even an accounting student after CSEC or whatever, or in Form 6 or whatever, a balance sheet where it's not sectioned off as in current and non-current, they could still look and see what is where, right? But the thing is, you don't want to make people work for the information. That's not the point of doing anything, right? But there is precedent for not sectioning them or classifying them as current and non-current, right? I would still suggest for CSEC POA, err on the safe side and putting them in current and non-current. If for some reason, let's say you're going to have money blanco, but you know, hey, I know all these are assets, all the liabilities, you will still get marks for correctly classifying the items as assets and correctly classifying them as liabilities. Mm-hmm. Mm-hmm. Right. Right. So that's a good question, right? So the question, if anybody else is interested, is if they specify order of permanence or order of liquidity, and you're not sure, but you correctly put stuff in the asset section, you will get marks for what you have correct. If you don't give them order of liquidity or order of permanence, there's only 1 max, 2 marks for that, right? So you will still get whatever you have correct, but you will. It's highly unlikely, probably 0% to get full marks because you wouldn't have followed an instruction, which therefore implies there's a mark awarded for such a presentation because it is on your syllabus for you to learn those things, and therefore they can ask for those things. But if they ask for something and you don't give it to them, you can't get a mark for what you didn't give. But if they ask for a balance sheet and you get them a balance sheet, but you don't get them their format, you cannot get 0 unless you just do utter rubbish, right? So if you do a balance sheet and let's say that you do it in the way you mentioned, right? You just have assets and you pop them in some random order. You have liability in random order. You will get marks for correctly classifying items as assets. But if there are marks awarded for format, as in current, non-current, or order of permanent liquidity, if there are marks for those things, you can't get those marks, right? So I would say worst case scenario, you'd only get 50% of the marks awarded, but that's better than 0, right? I would say it might be more around 60 to 80, but that's being generous, right? Okay, folks, we are at 6. Just let me check Google Meet. If you guys are good with the capital section specifically, let's give me a quick G. I know we at 6, but I have a minute or 2 to explain anything anybody wants there. But if you're good with the capital section, give me a G. Right, and also, it's the last day for balance sheet. We spent quite some time on it, and I want to move on, especially because you'll have mock coming up, and I'm sure you'll want to do some other stuff. So if anybody has any suggestions, any recommendations, any items they'd like me to go over before you mock, send them in the chat, right? And we could do a poll, right? And see. So if anybody has any topics, any easy topics, any hard topics, let me know. All right. So next week, right? Okay, later. All right. Apart from that, so Google Meet, I'll go on, right? But I will be back in about half an hour or less for maths. So those of you who join me for maths, you know the drill. The rest of y'all, I'll see you all on Wednesday. Bye. All right. Natalie, hi. All right. Yeah, Natalie, and whoever else is on. I was hoping that our gaming is still there. Wouldn't mind checking on this channel. But I had to go, but I'll be back on in about